Let's bring in the Trading Nation team, Bill Baruch of Blue Line Capital and Mark Tepper of Strategic Wealth Partners. And Mark, what stood out to me was CalPERS, the largest U.S. pension fund in the country, disclosing that it did sell Apple. You have a position in the stock. What are you doing with it right now?
Yeah, so, I mean, first and foremost, Apple is a must-own. You have to have it in your portfolio because it's nearly 7% of the S&P 500, and if you don't own it to some extent, you run the risk of severely underperforming the benchmark. So the question investors should be asking themselves is how to manage this risk. And for us and our clients, we've been trimming the position as it continues to go up. Are we leaving some money on the table? It depends how you look at it. I mean, if you're rerouting those proceeds into a company like NVIDIA, then you've actually done better. So look, Apple's a great company, but the issue is all of the returns over the course of the last 18 months have come from multiple expansion. So 18 months ago, we were at about an 11 on the forward PE. Now we're at 30 times. So, you know, look, the pandemic has boosted iPad and Mac sales, 5G rollouts around the corner. So there's a lot of positive catalysts here. But look, as this thing continues to go up, and it probably will, I think it's important to trim your position so it's not a ridiculous overweight. It's always a good thing to play with the house's money.
Got it. Bill, Goldman Sachs put out a note today saying they see the market rising another 7% from current levels. Do you agree with that call, and will Apple take us there?
Well, you know, Apple right here, this is its third leg of its breakout out above its previous all-time highs. I mean, there's a lot of tailwinds here technically. But one thing you want to look at, too, is there's a bull flag after its post-earnings run, and that bull flag over the last week and a half has created a new fresh breakout. So what I'm looking at in the near term, if you're trading this, is about 478 and then 499 are your two upside targets. But again, if you're trading this, you look at a close below 452, and you got to start managing your risk. Ultimately, you don't want to be chased out if this thing starts falling. And as Mark said, as it's rallying, you want to be capitalizing on it from a portfolio standpoint. But from a trading standpoint, again, be chased out if this thing goes down to 384 because that's where you want to be a big time buyer.
All right, Bill and Mark, thanks for joining us today.